What's up? All right, so no one's here. So shout out to T and let's see, Apsis, the artist. I've been contemplating starting or doing some videos for a while. These two people commented to something or replied to a comment I made and kind of gave me the nudge to start this. So let me start this off by saying I am an amateur trader. I am in no way a financial advisor. My experience has been only since March of this year, which was not a great time to get in. And I'll be upfront and honest with you, I have learned the hard way. When I got in, I didn't really study much, just kind of thought I'd be able to follow momentum. Got caught chasing more times than I'd like to admit. But lost a substantial amount of money since March. Just in one account, my main account, yeah, it's not pretty. 83% down since March. Let's see, yeah, March 12th. Got into options without really understanding options because I had a couple random first-time options make money for me, and then got cocky and thought I could just hold and see momentum come back, and Tesla burned me pretty bad. And then I will say that I was in AMC prior to 12, but during the major run-up, once it broke 50, I started really pouring in, pretty much consolidated most of my other trades, and then just really went hard into option plays. And when it came down from 70, I thought it was going to be a quick bounce back up, and yeah, diamond handing options, not necessarily the best idea. But like I said, I have learned a lot of things the hard way. Hopefully me creating some content out there for others, I can save some people the stress, the sleepless nights, and the overall gut wrench that is tied with losing massive amounts of money. But I was actually going to hold off on doing this until I made my money back, I guess. But I guess right now, thinking about it, in the last, since August 21st, I've made 10% back, because my all-time low was down 92% or so. 93, yeah, 93% roughly. So I've been clawing my way back, and I will be sure to also shout out Matt Kors and Trey Trades, and Zip Trader. I have watched those guys quite a bit, and I've learned a lot. Been watching Matt's live streams quite a bit as well, and I've learned a lot there, along with like his options videos and stuff like that. I will say I have not paid for any programs or signed up for any Patreon accounts or anything like that, but at this point I now that I've been able to, because I mean, now that I've been able to make some money back, I do plan on investing in that. And I will say your best investment will be in yourself. So if that means holding off and spending more time learning about things before just jumping in, don't get caught in playing this like a casino. And that is very much what ended up happening with me. But let's get into the content. That's for the most part just like a heads up. Hey, like, just kind of take this information and do with it what you will. Like I said, I have had my fair share of loss in the market, so it's not like I have a proven track record of constant gains year over year. In a matter of months, I had completely tanked, and then in the matter of the last, I don't know, couple weeks, I've really started to kind of figure out how to dig myself out. So yeah, let's get to the content. I also don't have a fancy YouTube page. The thumbnail on this is probably, I don't even really know how to do all of that yet. But like I said, a couple nice comments kind of motivated me into doing this. And I asked my girlfriend about it, and she's like, "You're a free agent. Do what you want." So here we go. So after doing my homework tonight with the threshold list, which is all about FTDs, failures to deliver. They're, from my understanding, and like I said, I'm not an expert in this, but from my understanding, if you're on that list, it's because you've had a lot of FTDs, and you're kind of going to get, people are going to get forced into fixing that. And what I've seen in the past is when that happens, when there is that force to like deliver those FTDs, it creates a lot of upswing, a lot of buying pressure. So lately I've been jumping in on the threshold list, and I'll go through all of them. There was an entire sheet of them plus 1, 2, 3, 4. So there's, I think, over 30 of them. Went down each one of them. Main things that I'm looking for is kind of like the similar outline for what happened with SPRT. Made some money on that going up, made some money on that going down. Could have played it better, but a gain's a gain. Got out really early on it. Took $1,000, doubled it almost instantly within a day. And so then I took that and took my money out, let the $1,000 play. Got into some 19 calls for, at that time, I think they were only like $1.60 a piece. That dropped down to 80 cents a piece. So then I pretty much cut my $1,000 in half and just got out of it because I was like, oh, maybe it's crashing. Don't want to, just want to at least walk away with some profits on this. And then I left, I think, like very little into the play, and that's when it took its huge run. So if I would have left everything in there, which hindsight 2020 always, but if I would have left all of those calls in there, which I think I had like 8 or 10 at the time, it would have been upwards of like a 40K play if I was able to top ticket out, which I'd never suggest trying to top ticket out. I have very much been about finding levels of resistance and support and just kind of trying to play those out on their way up. So as something is shooting up, I'm not trying to hit the high point. I'm trying to get out here, and then leave a little bit in. And then once it hits that high point and starts to come down, hopefully I can catch a little bit of that last bit towards the top. But for the most part, I am trying to do, like people say, cycle in, cycle out, rotate in, rotate out. I don't know what verbiage you prefer, but I do like trying to kind of average that cost in and then average those profits out. And then especially if you have house money that's playing, it makes more sense to just kind of let it ride. But yeah, could have been a $42,000 play, I think. Ended up all in all, because I did have some in the game at that time. All in all, I think it was like a 6K play off of a 1K investment, which was awesome. But at its peak, because I was I had sell order at 60 that I was going to put in once it hit 60, and I think it was like 31 cents away from that. And then I was thinking it would come back, and it didn't. So that, I think at that time I would have been like an 11K play instead of a 6K play. But like I said, don't try to top tick. Really, just when you're up, appreciate that you're up, because you will not see green days always, and that's coming from someone that has seen a lot of red days. But like I said, after doing my homework, after looking at the threshold list, Ortex is a data source that many other YouTubers use, that I've seen. Probably plenty of other people use Ortex, but I finally, which I wish I got a subscription to this forever ago, but I finally signed up for a free trial this past Saturday, and it has really changed how I look for plays. But like I said, I take kind of SPRT as a blueprint, like what happened beforehand, because it was just the numbers were just too good to be true. So I look for outstanding shares. I look for the free float percentage, which ideally it would be a low float. I don't know how to bring up other screens, like so you could see my desktop, so I could show you what I'm talking about. But if you have Ortex in the top left side, it will kind of give you, if you scroll down, it'll give you the outstanding shares and then the free float percentage. And then usually anything below 50% is getting towards the lower end. I'm pretty sure SPRT had like a 38% float, so like that was considered really low. Anything lower than that is, because the lower the float, the easier it seems like the stock can move. With any little amount of buying pressure, it creates much more bigger swings, it seems like, and more volatility. But on top of free float, I look for obviously short interest, because these usually I've been looking for squeeze plays. And then so short interest, I look for trends on the chart with short interest going up. I also look at like the past ebbs and flows of the chart. If it is a very like shoot up, shoot down type play, then I see that as opportunity. If there is criteria that's building up similar to what it was before, to kind of figure out a way of where to come in, how to ride that, where to get out, and then how to play that down too, which I have still benefited so far, unless SPRT makes another crazy run, which I am going to hit on here in a bit. But I was able to take some of the earnings from, so that 6K play on SPRT, there is 1K that's still in that play, which is riding it from 50 down. I went ahead and got 19 puts for October. So I had a feeling that it was coming down. It has been coming down. It's a gap fill play. When there's a gap in the chart, you try to play that, because usually the chart likes to fill those gaps. So that's what I'm going for. Today I almost got out of it. We'll see in the morning if I regret not doing that or not, because it was up, and it looks like I'm hoping SPRT will take a little bit more of a dip tomorrow to fill that gap to 20. I can cash in on that and just roll that right back into a call because SPRT is hitting some of these criteria that I'm still trying to break down. But yeah, this is a much longer video than I expected it to, but let's keep going. I look for trends in short interest, shares on loan, average duration, just to kind of give me an idea of what's going on with everything. I also look for cost to borrow on average to see if it's high, because that's money that the short interest are paying. The people that took out the shorts, that's what they're paying. So I look for high number on that. FTDs, like I said, if it's on the like that, when there's failure to deliver, there's something fishy going on in the market. Those have to be fixed. Usually when those are fixed, creates more buying pressure. And then I also look for if it has, so like if I'm going through the threshold list, first thing I do is I try to go through all of them that look like they have potential to see if they're on the options market. Because then there's gamma potential for a gamma squeeze. But if there isn't any options available, you could still make plays, but I've avoided it so far just because it seems like when there's gamma involved with the option plays, it seems like there's more potential of a huge upswing, but that's not always the case because there's nothing certain in this market by any means. And then I also look for positive news or like bright future, or see if there's good fundamentals with the play as well. See if there's a decent amount of volume increasing. But that's sometimes if there is that volume increasing and there is those catalyst plays and those positive news, usually you're getting to it a little bit late, I've noticed. So for the most part, I usually just look at a couple, like few things at first. So the free float percentage, the utilization, short interest, and cost to borrow. And on that note, my potential plays for tomorrow, here's my breakdown. I guess this is the main reason why I did this video, was to put this in digital form. So SPRT utilization dropped to 92.97%. Let's see, I originally had that written down from, I believe this is from, Saturday. It was at 95%, so it's dropped a little, but the cost to borrow has also dropped to 208 from what it was, 346. But the short interest has climbed significantly. When this play was just starting to gain ground, it was 74%, and now it's 91%, which is absurd. The whole reason why I got out of the play going up was not only because there's no way it could sustain going up that high that fast, but also because and why I didn't get back into the play once I got out was because I was trying to see if the shorts covered. And from everything that I've been able to see so far, it just seems like the shorts didn't cover. That was a huge gamma squeeze play because all of the option chain was in the money. So it created a huge gamma squeeze. Now, if it has a chance of reverting back, there is 91% of it is shorted right now, and it is still on the threshold list for FTDs. So it looks like a really good play right now, but I'm still trying to make sure that I can see some strength come back into that one before trying to move on it. And my actual moves, potential buys on it, I looked at the call chain, which the option chain is going to change by the morning because there's been movement in it. But I'm kind of looking at those 38 calls and then those $50 calls. And I'm on the fence between doing the September monthlies, which is 2 weeks time. What I've learned from the hard way is always whatever amount of time that you think you need, double it. So I've also been looking at the October monthlies, but they're for 30 more days. It's more than double the price on the $50 calls. And then it's close to being double the price on the $38 calls. And I don't see this one not moving sooner than later. So I'm going to probably play that one by ear tomorrow. But the September calls for 38 and then for 50 because those are two big levels that I can see it getting to. Anything further out, I feel like is a little bit more of a gamble. But there are, looking at the chart going way back, it does look like it could get to that $60 level. And then you're looking at, oh gosh, I'd have to get on here. Let's see, SPRT way out. 66 is another level that I had marked, and then 81, which would be just absolutely insane. And then anything past that. But at this rate right now, you saw what it was able to shoot up with just a gamma squeeze without the shorts getting covered, and now it's up to 91%. This play could be really, really volatile. But to continue into the original breakdown, Tattooed Chef, so ticker symbol TTCF, utilization is 99.77%. I was looking at this one on Saturday. I got into it on Monday. It is already looking profitable, but I was looking at that $21 mark. Once it got closer to that, I wanted to get in on the play, so I think it was like 2040 I got in a little bit, 2060 I got a little bit more, and it is looking, to me it's looking strong. It's trying to make up its mind. I think if it just got some more volume or attention to it, it could really make some moves, because the short interest on that one is 35.73%, and the cost to borrow is over 100%. It's just feeling froggy, and that free float is 50% for 50.55, so it's a lower float item as well, and it has had runs in the past, so I can't believe someone would watch all 22 plus minutes of this. But let's see, where is it? Tattooed Chef. Yeah, I have around 23.92 as like a time to really kind of take a peek at it, because once it hits that, I can see it hitting 25 or 27 very quickly. Anything beyond that, there's 28.64 I think is the more recent all-time high. But I think I would try to play that one a little bit safer around that 25, 27 mark. But that's just me. To continue, let's see, that one is also on the threshold list. All of these are on the threshold list that I'm going to go over here. And to BBIG, which has gotten a massive amount of conversation about it right now after the SPRT play. BBIG's utilization is 98.66%. Short interest is 41.17, which that has gone up, because as of Saturday it was 27.89%, and utilization's dropped just a little bit from 99% to 98%, but the cost to borrow has skyrocketed. It was 87%. It is now 265% as an average. That just is feeling froggy to me. So I have some in BBIG. It's really going to have to get some momentum in that to really take off. But it's got a lot of potential. I have alerts set up to let me know as it gets close to 983, because I see that as a potential breakout level. And then from there, 1050 and then 1160, I might take some profits. But if this thing really starts moving, I could see it getting past, like it already hit its high of 1190. There really isn't anything on the chart higher than that. So we're in uncharted territory there. Just looking at how much distance it can cover. I could see that easily hitting 14, but like I said, we'll see. I do have on my potential buys for tomorrow $12 calls because like looking at September monthlies, it's 223 roughly right now. And then October is 280. To get an extra month for that little, I feel like it's worth it. So I'm looking at the October monthlies for BBIG. But like I said, SPRT, TTCF, and BBIG, all three of those are on the threshold list. And then other plays I am looking at for entry are Workhorse, WKHS, because the utilization is 100%, short interest 37.83, cost to borrow is low though at 6.88. So usually when utilization is that high, usually the cost to borrow is significantly higher. So that one I'm not feeling as strong about, but I am going to keep an eye on it because it has moved in the past, and because it's a high short interest and a high utilization, it's really hard to pick and choose on who's going to start investing in what. So if that does start getting some momentum, that one could rip. And let's see. I am also looking at CRCT. It is low float at 9.82%, utilization 98.87%, short interest 25.22%, cost to borrow is a little bit higher than Workhorse at 34.46. I feel like if that gets shorted anymore or shares get borrowed anymore and that utilization gets up over 99, it is probably going to, that average of cost to borrow is going to expand quite a bit. And another play I'm looking at is CRSR, utilization 99.04%, short interest 29.71%, cost to borrow is 8.08, which is a little bit low, but it does have similar float to what SPRT has. So again, the cost to borrow on that one makes me a little bit hesitant, but because it is high utilization and high short interest, if it did get momentum, it could see some movement and rapidly. So I have alerts set up at different spots on the chart just to kind of give me an idea of where and what direction it's going, just so then I can kind of capture a little bit of the play. I'm not trying to bottom ticket to top ticket. I'm just going to try to kind of get in, ride a little bit of the wave and get out, take that money and put it into another play, or take that profit in the short term, watch where the things start to top out, look at the MACD or in the RSI and see where, all right, let's maybe euphoria's starting to fall out of this play. Let's ride it down a little bit, take some more profits. Instead of trying to make a big play up or a big play down, take like a small play up, small play down, and like leave with a medium solid trade for the day or for multiple days or whatever it takes. And then another one, I was kind of hitting on this one in the comment section on a variety of videos earlier today. I just had a really good gut feeling about it. ChargePoint had its earnings. They weren't the best earnings, but they had some positive earnings, and it was starting to get really, really low and on its overall price. Not to mention with the EV section, the way it is, it just seemed like a solid play, and that was before seeing that its utilization was 99.04%, its short interest was 29.71%, or wait, scratch that, I was reading the wrong line. Let's see, ChargePoint was a play I made today, and it's climbing in the after hours, and earnings jump might cause a squeeze. Don't chase the gap up, because it's going to gap up in the morning as long as the pre-market continues in the direction that the aftermarket was heading. But ChargePoint's utilization is 98.17%, short interest is 18.1%, and cost to borrow is low at 5.41. But like I said, it's making a big kind of jump up in the after hours. Let's see, just so that I can mention it, even though you guys could probably look it up just as well as I can. But charge point up 13.33% in the after hours. So like I said, don't chase a play. Watch what happens with it in the pre-market. Look for a support line. But it seems like with a jump of 13, if it was to jump another 10 to 13, it just seems like any time a squeeze play starts to happen, it's usually around when something goes up 20% in like a rapid amount of time. So that's usually what I look for. And with this already 13% in the after hours, if it was to climb another 10% in the pre-market, it may take, there will be some profit taking, but those people that were short on the play will be feeling some heat if it rips 20% in a day, or not even in a day, just in aftermarket, post and pre-market. So AMC is still my main play. And I see that as like a solid play still, because of the community involvement and because of the people I've learned from, and I made a lot of money back at one point with that play, and then I lost a lot of money with that play. I'm really just trying to continue to follow that play on its way up. I would say that it's probably well over half of my portfolio right now, which I know a lot of people would say is insane, and then there's some people I know that say it should be more than half of my portfolio. But I do use these plays, and I usually take the profits from these plays and I roll it right back into more AMC, and I try to time in support levels. But for the most part, it just goes into shares, because I have learned with AMC it's a lot harder to predict when there will be those breakouts, and so option plays are riskier, and that's what I lost a lot of money in. So I typically try to just buy the shares until I know and I see a breakout, and then I can kind of get into those option plays. But that's my breakdown. Here you go, T. Here you go, Absinthe, the artist, and then whoever else decides to watch this. Trust me, I don't plan on having these videos be this long in the future, and hopefully I can figure out as I go what to do with, I don't know, better lighting, maybe a better backdrop, see what the audio on this sounds like. But yeah, as this continues and as this progresses, maybe I'll make bigger and better moves. Until then, good luck in the market.